Investors and traders, welcome to the channel Market Chart Pattern. Today is 18th of June 2023, and I hope everyone is having a fantastic weekend. In this video segment, we are going to take a look at the key US banking stocks and the ETFs. We will start by taking a look at the smaller regional banks banking index ETF called KRE. We will also take a look at the XLF, which is the ETF for the financials, and then we will be taking a look at the key US banking stocks such as Goldman Sachs, JP Morgan, Citigroup, Morgan Stanley, Wells Fargo. This video is for educational purposes only, and it is not a financial advice. Those new subscribers who have joined us, welcome to the channel. This is a segment that we follow at least once a week, in which we go through the financial banking stocks and the key patterns that we have been watching. And the subscribers who are returning to watch the video, thank you very much for watching the content. Okay guys, so what we are looking at is the daily chart of the Spider S&P regional banking ETF, and here what we had been watching for was a pattern formation that we were looking for the price to get up to $46 per share level, roughly speaking, and that was the 38.2% Fibonacci retracement right here. So let me actually draw like this to mention this. So also let's put this in 0.382 RET for retracement. Let me make it smaller like this. There we go. And it appears that actually it is doing this in an ABCD formation higher. So this is going to be a key level for us to look at. And also from a symmetry perspective, in this entire decline, which started, let's actually zoom out here on 14th of January 2022, this was the largest rally which had taken place. And if we just clone this and we project it right from here, it also takes us to the same level. So this is why that level, because of the confluence of market symmetry coming together at the Fibonacci 38.2% retracement, this level holds a lot of importance. So $46 to $46.50 is the level that we are really watching for. From a momentum perspective, it remains the price remains below the 200-day moving average, and the price is above the 20-day moving average, but it's just in between that. And this is the key level or the key resistance that this stock needs to take out. Now, one of the things that I would like to mention is that when the SVB failure happened back in March, it took some time for the regulators to get together. With the help of the Fed, they announced a liquidity program. That liquidity program injected about $300 billion into the financial system, and I do not know how much it might have gone up by. At the moment, I will have to look that up, which I'll probably try to do for our next video segment when we do it for the banking stocks. And ever since that, we were watching for a support level, which came in around just a little bit below the 78.6% Fibonacci retracement. Initially, we were looking for somewhere around the $46 per share level, but the momentum was pretty strong, and it went down to about 78.6% Fibonacci retracement. The price did close below that, but now it has been kind of consolidating in that region and then moving towards our 38.2% Fibonacci retracement. So this is what we are watching here. By looking at the price action, you can see that although it has rallied, it doesn't have the kind of thrust that one might be looking for. So it does look bearish, and the bearish symmetry is in place. Let's take a look at the XLF. So here we go, the XLF. Here the situation is a little bit different. It's a little bit better as well. We had this a double bottom formation. Maybe you can even think of it as a triple bottom right here. on the 24th of March, and that's when the banking, the Fed came up with liquidity, etc., which started to come into the banking system, financial system. So here we had an initial rally and then we had a pullback. So we were watching for this yellow shaded area, and as long as price remains above this point C mentioned here, what we are looking for is an ABCD pattern formation, which could actually take us to around $34.32, which is likely to be a strong resistance level. And also here we have the same concept of bearish symmetry, and what we see is basically this was the rally that had taken place, and if we project it right from here, it also takes us to this level. So we nearly got into that zone. The high has been so far of $33.83, and we were watching for about $34 to $34.33. So it is actually in fact very close. From momentum perspective, price is just around the 200 a day moving average. It is above the 20-day moving average, but it's still in between. For us to get the momentum to the positive side, the 20-day moving average should cross above the 200-day moving average for a longer term, more sustained positive momentum. That's how we like to look at it. Then let's move on to the Goldman Sachs. So Goldman Sachs is a big investment bank, and here what we were looking for was basically this ABCD pattern formation, which is a one-to-one projection, which could actually take us to this zone, which we had been watching for between $355 to about $370, which is essentially the 61.8% Fibonacci retracement and 78.6% Fibonacci retracement. And here we were also watching for this bearish symmetry concept, and all the rallies have been of this much magnitude in this segment, or the swing to the downside. And if the price begins to move above this B point, then it will break the bearish symmetry. But as of last Friday, what we're seeing is we are seeing a potential double top formation. So the price was not able to clearly take out the point B. So in fact, it remains, the bearish symmetry still remains in place, and as long as that is the case, this point C that we were watching here, which we actually also marked as key support, because the 61.8% Fibonacci retracement could come under pressure, and if this low is taken out, then we have the lower prices to look at, which could be around $290 per share level. And in fact, we have a lower price level in terms of a bigger ABCD pattern completing right at around $243 per share level as well, which is going to be a pretty strong support, because of 61.8% Fibonacci retracement, and also a one-to-one price projection, which we like to call the ABCD, and there is structural support present as well. Whether that scenario will take place or not, I do not know yet, and we will have to keep on watching the key levels, which might potentially offer support here, and all these resistance levels, and we'll have to take one thing at a time to make an informed decision. So this is what we're watching in Goldman Sachs. So let's move to JP Morgan. So JP Morgan is another bulge bracket investment bank in the United States, and it's got international operations. And here what we have been watching for is this rectangular formation. This stock has actually been moving in a sideways, or basically not going anywhere pretty much all this time, ever since the liquidity got injected. So in fact, what it is doing is trading in a range, and now it is testing the top of the range. We have the 61.8% Fibonacci retracement coming in here. It really needs to take this $145 level out, $145.50 50 cents level, in a convincing way, and then we could have another formation, which could be a one-to-one ABCD formation to the upside. But till now, it hasn't done that. And if you look at the structural resistance coming in, that is still in play. Let me actually also highlight that by having a line like this here. So there is an amount of resistance that it needs to take out before it's able to actually move higher, if indeed it is going to move higher. So in terms of momentum, the price is above the 20-day moving average, and which is above the 200-day moving average. So that is something positive for this stock. And also it found the support from the 38.2% Fibonacci retracement of the swing low. So that is also something a little bit positive for this stock. Again, it's in our trading range and testing the top of the range for the moment. Let's take a look at the Citigroup. It's also a big bulge bracket bank, and here something interesting about the stock is that the Goldman Sachs and also JP Morgan, after the sell-off during the pandemic in March of 2020, the rally which took place, they were able to take their old highs out and make a new all-time highs, but Citigroup hasn't done that. So that's a negative in terms of the banking stocks that we are watching. And also what we were watching for was this yellow shaded pattern formation. The price went down, found support right from the 78.6% Fibonacci retracement of this swing, and then it is basically found a double bottom right here, and it's been moving higher and testing right the 78.6% Fibonacci retracement of this swing. So what we're watching is this swing, and where we are at the moment is basically 78.6% Fibonacci retracement, and also we have this resistance coming in because of this downward sloping trend line. So here the price is just consolidating. There was a chance, if the price is able to take this swing high of $50.45 out, that we could have a pattern formation like this, which could be another one-to-one price projection, which we like to call ABCD, like this, which could take the price higher. But if it fails at the 78.6% Fibonacci retracement, then the chances are that most likely it is going to go and retest the October lows around $40 per share level. So this is what we are watching in terms of the price action and the pattern formation in the stock of Citigroup. While we're just here, let me just highlight a beautiful ABCD one-to-one projection here, which we already had highlighted, but I'm just making a little bit clear. And you can see that the price wasn't able to take this one-to-one projection out, and it has been just going down or sideways ever since. Now let's take a look at Morgan Stanley. So Morgan Stanley had been one of the better stocks because we had a nice pattern of higher highs, higher lows here. But the stock recently, although it's been climbing a little bit higher, it is, in my opinion, just trading sideways. And now this little bit of support came in right between the 61.8% Fibonacci retracement and 78.6% Fibonacci retracement. Had it not taken this kind of a double bottom out, I would have been a little bit more appreciative of the price action, but it is more of a trading range at the moment. We can also quickly take a look at this stock on a weekly basis, and you can see there is a nice upward trending line here. So that is a potential support level coming right around $80 per share level, and if that goes in, then probably we are looking at about the retest of the lows coming in from June of 2022, which in fact also takes us to, on a daily chart, perhaps a little bit lower. There is a gap coming in from 21st of December right here of 2020. That could also be a potential target for the price, but again, we have to take one thing at a time, and we'll have to look at the support levels if they are broken to the downside, and then we watch for the price action. Now let's take a look at the Bank of America. So this is the stock of Bank of America. The price action, in my opinion, is actually pretty dismal, and in fact, it did find support from this support zone, which we had identified quite a while ago because of the 78.6% Fibonacci retracement coming in, and also we had a expansion of this swing, the one highlighted in red, to 1.272 and 1.618 Fibonacci expansion. So we were watching for some good support to come in, and the price of this stock has actually gone sideways. It is trading above the 20-day moving average, is holding it for now, but it's below the 200-day moving average. So the key thing is that for this stock to move higher, maybe do a one-to-one ABCD projection, it really needs to take out the $30.90 level out, which is this swing high. And so far, actually, in fact, just looking at it, it has done another one-to-one smaller ABCD projection right here. And looking at this from a retracement perspective, uh, there we go. So it's just finding it difficult to move because of the 78.6% Fibonacci retracement, and also the ABCD one-to-one projection coming in. So guys, this pattern formation in fact is bearish for it, and it's possible that it's gonna go and test the 25 dollars per share level, which is 78.6% Fibonacci retracement. That looks like a more of a probable scenario, and right at the bottom of this channel line here as well. This is probably the most likely scenario to take place, but again, we'll be watching this and informing you guys how the pattern is unfolding. Now let's take a look at the Wells Fargo. So the Wells Fargo stock is actually very interesting because it's been a stock that has been going down for a long time, even um, before this whole banking crisis thing unfolded. The stock was actually massively selling from the January of 2022. What it indicates is there was something already happening in this stock. It has been part of some scandals um, quite a while ago. So what we are looking at is basically the bearish symmetry is still in place. So whenever there has been a rally in this segment, it has been of this much magnitude and it has always sold off from there. So that is still in place. So this is the black line indicating the bearish symmetry. And then what we also have is that since it found support from this 78.6% Fibonacci retracement right here. Let me actually highlight it like this. I will just remove the 61. I guess make it a little bit cleaner. We were looking for an ABCD formation one-to-one, and it came pretty close to that. And also the price seems to be being capped by this 200-day moving average here. So we had written that down as strong resistance. So price is just fairly close to these levels, and it seems to be just consolidating here. And if we look at some topping action here, which took place, the price went a little bit sideways, challenged the lows and the highs again, and boom, it came down. We had a high here, we had a secondary high, and then it came down. So whether something similar will take place, probably, but I'm not sure. We do not know. And what we're watching is basically these key pattern formations, and we think that it's going to be a strong resistance level unless proven otherwise because of the price action. So this is what we are watching in the stock of Wells Fargo. So guys, thank you very much for watching the video. Apologies, it's been a little longer video, but we had to cover a lot of material, and I think it's after 1 week that I'm doing a video on the banking and financial stocks. So I think we had to cover this a little bit more in depth. And if you like watching our videos, how we look at the price action based on pattern recognition, pattern formation, Fibonacci ratios, expansions, retracements, and projections, please do subscribe to the channel. And if you found this video of educational value, then please do hit that like button. It just gives me an indication that my videos, people find them of educational value, and it just encourages me to keep on producing more and more of these for you guys. So thank you very much. Good luck and good trading, and have a great weekend.